All right, welcome everyone. Thanks for being here. I'm glad to be here. My name's Tim Racette, and I blog over at eMiniMind. And in the next 45, 50 minutes or so, we are going to be talking about becoming a peak performing trader and lots of things that I've done over the years. I talk about my some of my specifics in trading, but a little bit more general, so you'll be able to apply some of the techniques and mindset stuff that I've used to whatever market you're trading, whatever time frame you're trading. You could be a day trader, swing trader, stocks, options. It really doesn't matter. The concepts and kind of general principles will apply across the board to help improve your trading and hopefully bring you up a tier closer to becoming a peak performer. So thanks for being here. As David said, the webinar is being recorded. And for those that are watching live, I will do my best to keep my eye on the chat window. So if you do have a question that comes up during the presentation, feel free to type it in there and I'll try to answer it as we go. So, like I said, my name's Tim. I blog over, or my website, if you will, is eminimind.com. Started as a blog years ago in, I think 2011 is when I started that. But I'm primarily a day trader. That's kind of my bread and butter. I also swing trade, but for the most part, I'm day trading the E-mini S&P futures right at the NYSE Open. 5 days a week. And I got my start in about 2006, 2005, 2006 is when I started. I'm originally from the Chicagoland area, so I had a lot of access to traders and trading firms. Kind of got involved with Tom Sosnoff and the guys at Thinkorswim, kind of in the early days. Not so much the early days of computerized trading, but the early days of Thinkorswim. Had a chance to go down and spend some time in the trading pits. And those guys, mostly guys that were down there in the early 2000s, really kind of shooed us, it was a buddy and I, shooed us out of the pits and, kind of turned us away from making a career in the pits to the computer, screen trading, what we have today. The pits still exists, but there's just a lot more terminals around the pits. You kind of look at your screen, do your technical analysis, and then go into the pits to make your trades. Or you're just picking up the phone or getting orders from bigger institution from the institution that you're working for, and you're just going in and okay, we gotta sell 500 ES futures, try to get the best price. So you go in the pits and work your haggling between the other folks in the pits. So I spent a lot of time. Well, I grew up in the Chicagoland area. Then I went to ASU, and then now I kind of split my time between Scottsdale, Arizona, and up in the Black Hills in South Dakota. So kind of get the best of both worlds in kind of a never-ending summer cycle, if you will. So I've had the pleasure of presenting at the number of these expos, as well as things like the Money Show and Traders Expos and things like that, and as well as contribute to the CME and Futures Magazine and some other publications like that as well. So while trading is kind of my bread and butter and my main focus, a big part of my success has been pulled from the sports world and my background of cycling, specifically competitive mountain biking. And so there's a lot of parallels between professional sports and professional trading. And so there's a lot of both physical things that you can do to prepare yourself, but also the headspace and the mindset stuff directly translate. So a lot of what we'll talk about today will be things that you can apply and improve mentally to improve your mental game in trading and really, improve your overall performance ability just as a human being. So outside of trading, mountain biking, hiking, exploring, pretty much anything outdoors, I'm game for. Going all over the country to ride bikes and hike and explore and things like that just really give me a lot of joy and also put me in a really good headspace to trade. Years ago, when I first started, I began, by sitting in front of my computer all day, or at least most of the day. And then I would even wake up and trade the European Open. But that's really not sustainable in the long run. So narrowing down my focus to just the NYSE Open for my day trading. And then at the close, last half hour or so, I'll manage any swing trade positions. Sometimes I buy puts as a hedge for my long term, the boring, retirement, quote unquote, retirement long term portfolio that I have. And so I'll do that kind of swing trading, overnight trade management at the end of the day. And that's a nice way to break it up, but it really doesn't take that much time during the day to do the actual trading. So a little bit of homework at night, just kind of reviewing kind of where we are at on the daily time frame. And then when I open my, sit down at my computer in the morning, I usually sit down 10, maybe 15 minutes before the NYSE Open, and I'm ready to go, just kind of repeating and looking at the same setups every single day. So that's kind of a little bit about me in a nutshell. The first thing we're going to talk about are what I call the 3 C's, or kind of the pillars of not just trading and developing, a sound trading foundation, but really just pillars to develop mastery in whatever it is that you're shooting for. So the first one is commitment. And as with anything, you need to fully commit to the task. If you just kind of, half, I'm trying to think of another word, half a double hockey sticks, what you're doing, it's not really going to give you the buy-in that you need to really follow through. And so really making that commitment and kind of laying out, what is my objective? Am I just, do I want to, buy a few woodworking tools and tinker in the garage as a hobby? Or am I looking to start a business of building custom cabinetry? Am I looking to day trade as my primary means of income? Or am I 70 years old, retired, and I just want to kind of manage my portfolio and just outperform the market so that I can, make sure that I have income through retirement? So commitment is the first one. And then the second one is confidence, or building confidence. And once we commit, then it comes to this sort of crux of, how can I become confident in what I'm doing? And a lot of that comes from consistently showing up day after day. So kind of the confidence and consistency, they kind of go hand in hand. You could put consistency first and confidence second. It doesn't really matter. But by committing to what you're going to do, setting that goal. So let's just say you want to run a half marathon. And so you commit to that goal and you put that half marathon date on the calendar. And then every single day, you consistently show up and do something that helps move you closer to that goal, whether it's going for a run, sitting in the sauna, recovering, kind of putting a plan together to help you reach that goal. That's a high level plan. So in trading, it might look like, okay, I want to be trading 5 ES contracts. And in doing that, I'm going to trade, this setup. I'm going to, buy pullbacks to the 21 EMA, and then with trading 5 contracts, shooting for 6 to 8 points on the ES, and that's going to in turn generate $5,000 per month. And so if that's kind of the goal that you're committed to, then the consistency part is showing up every single day, sitting in front of your screen, looking for those setups. And in turn, that helps build the confidence, seeing the setups work day after day, even if at first you're only trading, on a practice account, or trading micros, or just trading one contract, gaining the consistency, or in being there every day and being consistent, helps you build that confidence. And then the kind of the bonus pillar or the fourth pillar is being able to adapt and learning to adapt. So you kind of go through the cycle where you acquire some knowledge and then you test it out. And so you might, you know, someone tells you a tip on cornering your bike better. And they say, oh, you really want to lean the bike and not your body when we're talking about bicycles, whereas, motorcycles, you're leaning over with the whole bike. So you pick up this nugget of wisdom or piece of knowledge, and then you go out on your bike and you try leaning the bike. And at first, it feels a little bit weird. You might fall a few times, and you just kind of go around the same little track over and over again, practicing, and you're consistently, going in and day out and practicing these turns. And then it slowly starts to build confidence. And then you get really good at cornering on your local trails. Let's to continue the analogy. And then, if you were to go somewhere else, maybe you go to a place where there's wet trails and wet roots, and then you learn to adapt to cornering on in those conditions. And so the same thing is, applied to trading. We learn a specific strategy or approach. Maybe you're trading options and you're doing really well while the market is in a very low volatility environment, and it's just kind of, you're selling premium, let's say, as the market's going up, and then all of a sudden we start the year and things start to go haywire, volatility goes through the roof, and your trading strategy starts to break down, or the cost of putting on those trades is just very high. So then we kind of have to adapt or pivot and incorporate new things or make little tweaks. So those are kind of the starting point, the 3 C's that I kind of always start with. And a quote that I really like, or something that I talk about, is harnessing the power of commitment. And through that, we build confidence through the experiences that we have, and you master your craft through the consistency, that repetitive consistency. And then we learn how to adapt. So we learn the basics, and then we learn how to, take those basic skills and kind of incorporate more advanced techniques. So the second piece, kind of going back to the goal in a way, is to have a healthy means. And so you want to start by defining that clear goal or the purpose and putting together a plan so that you can develop just day-to-day habits that are healthy in themselves. So if your goal is to be on the golf course, 3 times a week, or ride your bike 6 days a week, and trading is going to allow you the flexibility and the time to do that, going out and golfing or riding your bike, in general, those are healthy means on a day-to-day basis. And if you have that goal or that purpose in place, then you can focus on just the day-to-day, training, if you will, that helps you get there. And then breaking it down even further to focusing on one thing at a time. So this week, you might just be focusing on managing your stop. You get into the trade and you're just going to focus on, trailing your stop throughout the trade. And you're not going to really focus on, setting a target or analyze the market as you're in the trade. You're just going to focus on, trailing your stop. The next week, you might focus on just spotting one specific entry on one time frame. And every time you see that entry, you're going to take the trade. So if you can kind of break it up and focusing on one thing at a time, then you can master that piece and take it from, something that you do consciously and turning it into more of a subconscious habit. And then you'll always want to be focusing on how can I minimize and simplify. And pretty much everything that I do in my life, whether it's trading, cycling, parenting, relationships, how can I get the most benefit, is going to be by focusing on the most important things. And I can't focus on 50 things at once. So minimizing the things to focus on and simplifying, and that directly relates to your trading plan, your setups, your entries, how you're going to manage the trade, how you're going to exit the trade. The more you can simplify those and take a 5-page trading plan and condense it down into 1 page, the more successful you're going to be, because it's easier to implement 1 page or even like a 3x5 note card of setup criteria than having to make decisions based on a 10-page trading manual. So when I was starting trading early on, I had pages and pages of notes typed up. And every weekend I would print it out. That was kind of my trading plan, and everything in there. I'd print it out. I'd highlight stuff that was important. I'd cross out stuff that, maybe it didn't really need to be in there or was tied to something else that I could just get rid of, this bullet and that line. And then slowly I condensed that down. And now I essentially have, a 3x5 note card with the core of what I need to be trading. So simplify, clarify is the third little piece in there. Minimize, simplify, and clarify. And by minimizing and simplifying, it helps bring clarity to your ideas. So if you look at the day-to-day habits that you've created, you want to make sure that those habits are leading you down a healthy path. And I'm not here to judge or to say whether you're like to go out and have a few beers or margarita or whatnot is healthy or unhealthy. I love a good margarita, and especially a good IPA from time to time. But making sure that your goal that you have is healthy to help create day-to-day habits that, even if all you did was, go for a run a couple days a week, and when you get to your half marathon, let's say you only make it 10 miles and then you have to walk, or let's say you only make it 5 miles and you have to pull out because you just can't run anymore. The day-to-day habits that you've created have helped improve your health, and by means of creating healthy habits, maybe you're eating a little bit healthier, maybe you're drinking and smoking a little bit less. Now that creates a better headspace to be able to think clearly at your job, play with your kids, be more present, trade better, directly related to trading better. So anything that you can do to kind of create healthy day-to-day habits will help to improve your trading. Then the third one is work with intention. And so we never want to be kind of willy-nilly, just coming to the trading screen and sitting down at your desk and just throwing out a trade here and there. You want to be very focused. And so figuring out when you do your best work is something that's super beneficial. When you want to be very focused and intentional, because that's going to help you grow a lot quicker. And if you can figure out when you are best, kind of most present in the day, or when you do your best work, that can be a really helpful time to kind of block out so that you can be more focused and intentional during that time. And you're not just, then you can save tasks that are a little bit more mindless for other times of the day when you might have more distractions and you might be, not as focused. So reading is super helpful. When you read something, I like to go for a walk afterwards if I'm reading, like a nonfiction book or some kind of not a fiction book. So read a little bit, read a few pages or a chapter, go for a walk, let it digest, think about how you can apply what you've read. And then it's also, I find, helpful to talk about it with someone, whether it's sharing in the sense of, like I might share something on Twitter or, in our Discord, or talking with a friend about, trading or trade setup that I had, or something that I might have picked up from a book or whatnot. Kind of that cycle of taking in knowledge and then applying the knowledge is a really good way to solidify it in your brain. especially now with YouTube, you can watch videos on all kinds of stuff. But a lot of people, even if you're a visual learner, like if I was to, talk to you about, framing in this window that I'm looking at here. I could talk to you about, jack stud, king stud, cripples, all the different things that go into the framing. And this is how high everything needs to be. These are the dimensions. But actually doing the thing and applying what you've learned and swinging the hammer and shooting the nails and then tipping up the wall and realizing, oh, we're, a half inch too tall and, those kind of things, the hands-on, especially when it comes to trading, is super beneficial. So you can watch trading videos all day long and, watch people trade, you know, 20 contracts, but actually doing the thing and practicing yourself, even if it's on a practice account or trading the micros or trading just a couple shares of stock or one option contract, that's where you're going to get a lot of the bang for your buck by actually applying what you learn so that you can go through the motions. And you can still save a lot of the mistakes or not go through some of the mistakes by learning from others, but you still need to apply what you learn. So that's just we talked about sim trading and then moving to trading live. So a deep focus speeds up the learning curve and then promotes improvement. So if you can be focused for a short period of time, be very focused and not distracted, taking that book and going to a place without your phone and just have a notepad to take notes, pen and paper, sitting by the creek or something like that, you can gain a lot more knowledge and retain that knowledge a lot better. So 4 is develop a decision-making process. And we talked about, figuring out when you do your best work. So if you're really productive from 7 to 11 in the morning, you want to block out that time so that you're doing your most important work during that time. If you're super productive after the kids go to bed from, 7 to 11 at night, then you want to block out that time to do your best work. And then, during the day, you can do some of the more mindless tasks and not feel bad knowing that, okay, I've got this 2 or 3 hour window where I am super motivated and focused and productive. And I need to cherish that time to really focus during that window. So sometimes physically distancing yourself from distractions is helpful. You don't necessarily have to go to a mountain cabin for a retreat, although sometimes that's really effective. Some people work very well in chunks. And in a sense, that's kind of how I structure my year. I spend 8-9 months in Scottsdale. And then when I come up here to the Black Hills, it's a bit of a distancing myself from a lot of the fast-paced lifestyle, and you're sitting by the creek and having bonfires and things like that. And so putting some physical separation can sometimes be what you need, especially if you're having a rough trading week and you get the Friday and you just need to that's why the weekend is really nice to kind of reset. So you come back Monday, you've had these 2 days off, you're physically distancing yourself from your trading. Sometimes it's best to take Friday off, have a long weekend, don't even look at the charts, don't think about trading, and then come back next week and start building back up again. So I like the 3x5 note card exercise, where if you can take your trade setups and write them down on a 3x5 note card, that helps force you to simplify and clarify. And then just being consistent. Like I said, showing up day after day. I was never a particularly gifted athlete in as far as like just being naturally gifted. But I worked really hard, and I still work really hard, I should say. But most importantly, when I was younger and kind of building up to this point, and if you want to run a marathon, just getting out the door and being consistent with your training is any kind of training is the most important thing is the day by day consistency. So you're going to be much better off, running a mile consistently day after day versus just going out once a month and running 5 miles and then doing nothing else. So the consistency is really the key, and it's almost so simple that it's simple not to do. The consistency day after day. It's like um, if you want to quit drinking, it's just, okay, how can I get through today without picking up a bottle, or quit smoking, let's say, because that's a little more popular. Um, you know, how can I not pick up a pack of cigarettes and smoke just for the next hour, and then just for this afternoon, and then just for today, and then just for tomorrow, and then just for this week. And all of a sudden, you start stacking day after day, and that starts to build confidence. And then that consistency leads you to the results that you're looking for. So the more sound our decision-making process, the less emotional and subjective behavior to follow. And so if we have a very clear decision-making process, then we're going to be quicker making our decisions. We're not going to be second guessing our decisions, and we won't be as emotional and be trying to interject with all this subjective behavior. Another thing I always remind myself or say to myself is to expect the unexpected. And when it comes to trading, there's nobody on the planet that knows what the market is going to do for certain. We might have an idea. This policy or economic change is going to lead towards X, but we don't know for certain. And so always expecting the unexpected and just kind of coming up with different scenarios of wacky things that could happen. What if the market goes up and I'm in this position? Well, that might be great. Well, what if the market goes down and I put this position on? Well, that's going to hurt the position. Well, what if the market goes sideways? Oh, actually, that could hurt the position too. So thinking about, unexpected things that could happen, and being prepared for those helps you think clearer when unexpected things happen. So one thing that I would do in bike races, like really important bike races, is just kind of visualize things going wrong. Visualize getting a flat tire at the worst possible place on the course and having to get back to the tech zone to swap a wheel, or having to put a plug in. And if you visualize some of that stuff, or maybe you crash, you get tangled up, or maybe you just start the race really poorly and now you're way in the back and you should really be up in the front, but you're not. How am I going to work through the group and work my way up? So, or let's say you're playing tennis and you're down, or you're playing, your basketball and your team is down. Like if you can, instead of just visualizing, scoring the game-winning basket or shot, or standing on that Olympic gold medal podium, visualizing things that are more challenging to overcome, and then walking through, okay, how could I overcome that? What happens if I'm, trading and my mouse battery dies? Well, I thought about that, and I always keep a backup set of batteries next to my computer here in case it does happen to die on me. Or what happens if my, computer shuts down? Well, I would always have my broker's phone number, on a Post-it note right by my computer in case I had to call. So stuff like that helps de-escalate intense situations that could be potentially difficult. So training your brain to think different, that's one of the benefits that this has. And, I kind of call it the layperson indicator of, what would, well, I guess it goes two ways. On one side, when you start hearing people that are not really involved in trading in the markets starting talking about a market or a cryptocurrency or Bitcoin, your red flag should start to go off and thinking, okay, this is starting to get overinflated. Sally down the street doesn't know anything about stocks, and here she is talking about buying Bitcoin. I probably want to maybe take a little profit or sell. And those kind of things, just the unexpected can always catch us off guard. So the markets certainly don't like uncertainty. And the more things come out of left field, the more they can kind of derail us in our trading. So training your brain to think a little bit differently is always good exercise. One thing to always remember is that what works in trading is going to be unique to each trader. What, my late trading partner, Justin, would consider a low risk trade or size, I am not as comfortable with. While he can sit in a heavily positioned swing trade overnight, I might be more comfortable with half that size to allow me to sleep at night. So you need to focus on the strategy and the market that resonates with you, and then pursue that to really understand the ins and outs. Become a master of your strategy and your time frame. Don't just jump on the bandwagon or follow the herd, if you will. It's important to really master and become a master of your niche. Number 6 is taking calculated risk, and there's 10 of these, so we're getting through them pretty quick here. So taking calculated risk. So the numbers or your trade data or your trade log, or if you have a journal or an online journal, the numbers need to make sense. So even if you have the greatest setup, you need to look at the numbers, your reward to risk ratios, your expectancy, average winner, average loser, and plugging those in to make sure that you come out with a positive expectancy. And then taking it one step further, even if you have a positive expectancy, what is the frequency that you're going to get these trade setups? And if you're only getting one trade a month, is that enough to reach your goals? So some things that can help kind of put bumpers up on your trading is to set a daily and weekly max loss so that your losses are capped. And then if you have an open-ended reward, that helps make the reward to risk asymmetrical. Kind of partitioning funds. So let's say you've got 25 grand that you're going to start day trading with, putting $5,000 in an account and trading, a couple of ES contracts. 5,000 is more than enough to get you started, and take that other 20 and stick it into savings accounts where it's physically separate. That's just another way to help limit the risk. And then one thing that I like to do every week, or you could do it every month, but I find that doing this once a week at the end of the week is helpful, is just asking yourself what's working and what's not. And everything from your trading to life stuff, all of it. And that helps kind of course correct the ship. So if you're looking out towards the horizon and okay, we're headed north, we're going up to Alaska, we're heading north on our ship. The waves are kind of pushing us left and right. But we kind of like generally head north and we course correct and move a little bit to the right and the left. And so every single day or every single week, asking yourself what's working and what's not helps you put the focus back on what's working and identify the things that aren't working so you can do less of those and then continue to move forward. Constantly ask yourself what's working and what's not. And so not all traders are equal. They don't value the risk the same. They don't value the reward the same. For you, $4,000 a month might be plenty to live off of. You're retired, you have a paid for house, you have a pension from a prior job, and you go on 1 or 2 trips a year, play with the grandkids, go to some nice dinners, and $4,000 is plenty. Maybe if you're younger, you got kids in daycare, and you've got a couple of houses, and you're running a business, and you like really expensive vacations, nice cars, extravagant dinners. You might need to make $10,000 a month. So your lifestyle and your situation is going to kind of guide the types of trades and the size of trades that you need to make. And a lot of times, if you do that exercise and look at your expenses each month, you'll find that you need a lot less than you think, especially when you start cutting down on the, stuff that might not be necessary, or the stuff that really just doesn't make you happy. Maybe you go to these nice dinners and you drive these nice cars because that's what your neighbors are doing. But when you stop and think about it, you close your eyes, you say, well, what's my perfect day? Well, go play 18 holes of golf, have lunch with the guys, come home, play with my grandkids after school, and have a nice dinner at home with my wife. And it costs me, you know, a golf membership and $50 lunch and buy the kids some toys. It doesn't have to be necessarily, what you see others doing is not necessarily what's going to make you happy. All right, number 7 is probably the most important. The mindset is everything. You see this all the time where you have two individuals and they both say they want the same thing. You've got Johnny, who's in the 8th grade and he's 6 feet tall and he wants to join the NBA, and but he doesn't want to work for it. And he just kind of, he's naturally gifted, so he's pretty good on the basketball team, but you get to high school and he just kind of stays mediocre. And then you got little Jimmy, and little Jimmy's only 5'8", but he really wants it. And maybe he'll get a growth spurt when he gets to high school, but he works super hard, and his mindset and focus is all around creating good habits to propel him towards his goal. And by the time, he gets to college or his senior year of high school, he grows, 5 inches. Now he's, pushing 6 feet, and, makes into a college team and continues those habits that he's created, continues that consistency, and then from college makes it in the NBA. So if you can start your day off right, which I found with having a young child over those years can become a lot more challenging than when you're single or when you're just married. But that morning routine, getting you set for the day, especially just your morning trading routine that helps you put you in the right headspace to trade, is super important. I always would, after every training ride, write down one thing that was good about that ride. Even if, overall it was lousy, I would find one good thing that I could write down in my training log. And the same thing is true for trading. And finding one good thing you did that day helps to build up those mental, kind of this mental toolbox, if you will, of positivity. And so if you get into a slump or if you get into a tough time during a race, you can pull all that positivity out, all those good things that you've done, and that helps keep you in a positive headspace when you're going through a drawdown or just having a tough trading day or a tough trading week. So, just because you had a lousy week this week, don't forget about that 15-point winner you had last Thursday and how 2 weeks ago you made $2,500. It's easy to get caught in the last trade that you took or the last race or the last game that you competed in, but don't forget about the bigger picture. And then probably the most important thing you can do out of all the things, exercise, eat, is sleep. And getting really good rest is super important. I know there's lots of different caffeine drinks we can take and whatnot, but when you're tired, your body is telling you that it's time to rest. And so making sleep a priority, I know it's difficult, but it goes a long, long way. Everything from, weight gain and just overall health to being able to focus and trade better. And then a big thing that helps most people, you don't have to be a competitive athlete or a runner or go to the gym or do yoga or anything like that. If you just go for short walks outside, that is super, super beneficial to your mindset. And, sure, there's some physical benefit, but more so to your mindset. And so if you just had a stop out in your, day trade, or you had a losing trade, or you're having a bad morning, go for a quick walk, come back, and it always helps to kind of give some fresh perspective. Uh, the same thing can be said if you're upset or mad or frustrated. Take a breath, go for a short walk. Obviously, if you're upset about something, it's easier said than done, but really, really making short walks a part of your daily routine is super beneficial to your mindset. Obviously, you can do things like meditate and yoga and things like that that are phenomenal for mindset and becoming very aware of what's going on so that you don't overreact. It's like, oh, shoot, I just got stopped out. Oh, let me get back in. I got to make this money back right now. You know, Doing things like uh, breath exercises and yoga and all that is exceptional for mindfulness and becoming a better trader. But taking a short walk outside is also super beneficial. So our attitudes influence our behavior. And positivity and enthusiasm, not only does that help yourself, but it helps others. And sometimes you're around people that, are just an Eeyore and they can bring you down even on your best day. And so if we come into things with a good attitude, that will then help the actions that we take. And the flip-flop can be true as well. You could be just down in the dumps and grumpy and having the worst day. And I've certainly, been grumpy pants a time or two. And you know, getting out and going through the motions. Sometimes it's like, you just get outside and go for that run, or just get on the bike and start riding. And then all of a sudden, 15 minutes, 20 minutes, 30 minutes in, you start to feel a lot better. And so our attitudes and our behavior are very much tied together. And if we can come in with a positive attitude, that will help our behavior. If we are really having a crappy day and just going out and taking that walk, doing that behavior will then help bring positivity to our attitude. So I guess I only had eight of 10, or eight pillars, if you will, mindset pillars. So to kind of summarize what we've talked about here, the first one is the 3 C's: commitment, confidence, consistency, and then taking that and adapting. And a lot of times we think we're committing, but we haven't really fully committed. And commitment does a lot to your mindset of finding possibilities. Some people call it, what do they call it? Manifesting. And if you have a goal and you write it down and you look at it every single day, the chances of achieving that goal skyrocket. There was it's kind of like the idea of burning the boats. You cross the ocean or a big body of water and you make it to land, and your goal is to, develop, conquer the land. If you burn the boats, there's no going back. And all you're focused on is moving forward. And so commitment can be one of the hardest ones to fully embrace. But if you can do that and you can consistently develop good habits day after day, then you start to build confidence, and then you can really become a master of your trading and then adapt to different markets. Take one strategy, move it to a different market, a different time frame. Volatility kicks up really big. You can cut your position size in half and double your stop. There's lots of little tricks and things that you can do to become just a well-rounded trader and be able to trade well in any market, and really any time frame. Having a healthy means is a good way to keep your goal as the big goal and the objective, but day to day you're not necessarily focusing on the big picture as much. I have some friends who are own hedge funds and things like that. And sometimes you get so into the money. Luckily, this hasn't happened to them specifically, but other traders it has. I can't think of the name of the book now, but the one about the '09 financial crash was super good. I've got it on my reading list. But and it talks about, these traders who you're making millions of dollars a day, and you just get so greedy, and then you lose it all. And so having a healthy means, knowing, you know, what is enough, can really do a lot for your mental headspace. Working with intention and being super focused is always going to give you a lot more progress than just kind of willy-nilly just messing around without any kind of objective for that workout, that trading session. Having a decision-making process that's laid out so that you can kind of develop a process for how to think. Thinking in Bets by Annie Duke is a fantastic book. And then she has another book that's more about bigger decision-making process. And that one might just be called Decision, but it's also by Annie Duke. But those are two really good books for having a framework for making decisions. Thinking about the opposite, like, okay, I'm looking at getting in this trade as a long. Well, who might be looking at getting into it as a short? And who might be looking to take the other side of the trade to at least make you aware of it? And if you say, nope, still looks like a good long, one thing I can do, or you can do in Thinkorswim, is you put a minus sign in front of the symbol, and it flips the chart upside down. And so if you're looking at the chart and it looks like a long, and then you flip the chart upside down and it looks like a short, well, that validates the long. If it looks like a long both directions, upside down and right side up, now it's probably not that clear and great of a setup. Take calculated risks. If you find yourself focusing or thinking how much money you can make on this trade, you need to take a step back and make sure you've have your risk managed, and don't just say, ooh, this looks like a really good trade. I normally trade, $500 risk on my swing trading positions, but I'm going to risk 2,000 on this one. Or I normally trade 4 contracts. I'm going to trade 10 because this one looks so good. You really want to make sure you're calculating your risks and keeping your risk in check. And then mindset is everything. It really comes down to the mindset that you take into your day-to-day will carry over into your trading, into your sports and extracurricular activities, and your family and your relationships and your friends and all that stuff. So having a strong, solid mindset is what's going to help drive that success in your trading career and just overall in your life. So that's what I have for you today. Thanks for tuning in. You can check out E-mini Mind if you want, or if you have specific questions, feel free to shoot me an email, tim@eminimind.com. I want to thank David for having me again, and I appreciate everyone for tuning in.